I think a very major news, I don't know if you guys have followed through, about the SRR, statutory reserve rate, that Bank Negara has dropped from 2 to 1%. So SRR essentially is how much percentage of total assets that the banks need to keep as kind of like emergency money or reserve, right? So that dropping from 2 to 1%, it has huge implications, because essentially banks now can lend more, right? I think there were reports coming that this effect is about 19 billion ringgit. That's, imagine, it's being released into the system lah. So you're getting kind of a monetary policy expansion effect. I think it's been quite underrated, but you're going to probably see a lot more liquidity.
So with regards to the SRR, does this rate change very often?
No. The last time SRR was dropped that big of a percentage was 2009.
Wow.
Yeah, 2009, yeah. So it's been
17 years, 16 years.
And that's post GFC.
Yes, because of GFC.
Post GFC.
Yeah, so it's because of GFC. So that, when you have that much liquidity, you're going to see asset prices move up.
I think the way Bank Negara or the government looks at it is like, we need that growth, because looking at the potential, what is impact on these tariffs and everything, right? So it's good to, let the bank to lend more money outside. And then to add to that, CGS view is that the US going to cut as much as 75 points, right, for the next between 6 to 12 months, and the ringgit will strengthen. That is our view, our house view, to, if I'm not mistaken, it's about 4.2 from where it is now. So that will actually help. So yeah, it's not a bad time.
So essentially the SRR is used to stabilize our currency. Is that a fair assumption?
It needs to be, lend out or to be in the system more rather than the banks keep the money,
Yeah. Like liquidity control in a way.
Yes, correct. Yeah, in that sense.
Let's say, very simplistic view, for every $100 that the bank
$2
has,
or $1.
Yeah, so $2 needs to be kept all the time. And sometimes some banks overlend, they lend too much. So that's why you have overnight money market rates, right? So to keep that 2%. So this reserve is a regulatory requirement. And sometimes it costs the bank money, because if they don't have enough deposits, then they have to borrow, right, to cover that 2%. Essentially, if they didn't have enough deposits and they were lending out, now it's actually reduced their costs. And then those that have excess capital, now they've got extra money now. You better go and because if they lend it out, of course, then they get more profits, right?
So just to play devil's advocate, what are the downsides of reducing the SRR to 1%?
I mean, bank run, bank failure.
We are well capitalized and also, our banks are solid. Don't have to worry about that.
Hey guys, thank you so much for watching Borak Bursa. If you enjoyed what you saw, check out our full episodes in our link in bio.